Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Tuesday. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. So today's market update, I'll talk about last week, how we saw pretty significant improvements in mortgage rates, how so far things have been a little mixed this week so far, and whether I think there is a trend forming or not. And then I'll preview the next 2 days of this week, which should be pivotal for mortgage rate movement as there's a lot of job data both days. So last week we saw pretty much steady improvements in mortgage rates up until Friday, which I'll get into. But the early gains were largely due to two things. One, the US's involvement in Iran, the possibility, I think, that investors had feared that this would cause a real uptick in oil prices, which was unfounded. In fact, oil prices declined early in that week, and I think that was a positive thing. And then the other was multiple Fed members speaking out on how they would support a rate cut in July, the next Fed meeting. So that was all viewed as positive. And then more news on the Iran conflict, the ceasefire, seemed to be less US involvement. I think that was also part of the rate improvement. It was really not a data-driven improvement in mortgage rates, which is always something that makes me a little nervous of pullback once data comes in. But Thursday, we did have a little more data come in. Initial jobless claims came in lower than expected, but still at a somewhat elevated place. And what the market seemed to fixate on was continuing claims, which is another metric that shows job strength or weakness, in this case showing weakness, because that came in higher than it's been since 2021. And that continued the improvement in mortgage rates. Then Friday, we had PCE, personal consumption expenditures, come in higher than expected, this is the Fed's preferred metric for inflation. Normally, you would think that would cause an uptick in mortgage rates. It really didn't. It was pretty much flat on Friday up until Donald Trump announced that he was not going to be negotiating with Canada on tariffs anymore. And that did lead to an initial pretty sizable uptick, and then eventually a little bit of a decline to only a minor uptick for Friday. Today, mortgage rates after yesterday, again, really no significant news to explain this, but mortgage rates did improve again. Today has been the pullback that I was kind of bracing for after all this improvement without a lot of data to explain it. And it hasn't really been due to substantially bad data either. I think it's more of a natural correction. There were comments from Jerome Powell this morning at a panel where he pretty much said the same thing he's been saying, which is that the Fed is not going to cut rates if the economy looks like it's moving along strongly until we are at a more finalized place with tariffs. That said, this is a very significant week for jobs data, and this will tell us whether there's a high chance of a rate cut at the end of this month or a low chance, in my opinion. So tomorrow we have ADP employment. Now, this is a measure of employment that comes out once a month, measuring private companies. So this number, since the passing of the tariffs on April 2nd, has had the most significant decline. It came in 61,000 the first month after the passing of the tariffs, then 37,000, which was a third of the expectations last month. Tomorrow, the projected number is 100,000. So it's expected to tick back up a little bit. And that had been the number it had been around, a little higher than that even, before the tariff. So it's expected to return about to normal. If that stays low, that's definitely going to be a positive for mortgage rates and will show weakening of the job market. And that's the kind of thing that could lead to a rate cut at the end of this month, even if the tariff situation is still a little up in the air. Then on Thursday, and normally this would come on Friday, the first week of the month, but because of July 4th, it's a day early, we have unemployment rate, which is expected to go up because we've seen initial jobless claims elevated the past month, and that's usually a predictor of unemployment rate. And then non-farm payrolls, which is similar to ADP, but measuring a different sect of the job market, including publicly traded companies and government jobs. That number has not been as affected by tariffs, and it's really been driven by a couple specific industries, as the amount of government jobs available has declined noticeably since Trump's presidency. However, that overall number has remained pretty high, and that's expected to stay about in the same range at 110,000. Last month it was 139,000. Now, if that comes in dramatically lower than expected, and if unemployment ticks up more than 0.1% as expected to like 4.4%, that would be, again, a sign of a weakening job market and would be a positive thing for mortgage rates. Conversely, if we get both ADP and non-farm payrolls at a higher number than expected, like 150,000 for both, and if unemployment stays flat, 4.2%, I would expect continued pullback in mortgage rates and most of the gains that we saw last week to be probably reversed if that were to happen. If you have any questions or comments, shoot them below, or feel free to call, text, or email me. But thanks for tuning in to this video, and I will see you next time.